You know, Greg, I kind of got caught in calling you Bear and Greg at the same time right there, because I've always kind of known you to be at least a little bearish. But you did correct me last time we talked. You said you haven't been bearish the last two times. You've been cautious. How are you viewing the markets right now, especially after NVIDIA earnings, going into PCE, that could change the dovish stance that we saw from Jay Powell and maybe the possibility of rate cuts?
I don't think it matters, Frank. And let me contextualize that. There are, as you rightly note, I have normally fixated on the data, what the data dictates the Fed should do, what the data dictates the market position should be. And at this juncture, I think it's really hard to have a bearish posture. On the one hand, we see a Fed that by whatever mechanism is about to acquiesce to the president's wish. And we've seen that this administration is highly efficacious at, through whatever mechanism, getting its wishes. And in this case, it's lower rates. And if we know that lower rates are coming, it doesn't matter if it's September. It doesn't matter what PCE says. It doesn't matter what the jobs report says. It doesn't matter what CPI says. What we know will happen in a rate lowering environment is that money supply will increase, and we know that that is a primary driver of equity values, and we know that earnings growth will increase, and that is already on a three-quarter course for double-digit growth.
All right. By the way, your word for today is acquiescence. You put out the thesaurus on us. You mentioned acquiescing just a short time ago. I want to talk to you about the broadening of the market that we've seen this month. We just pointed it out. Small caps far outperforming the broader market, up over 7%. We also saw healthcare rebound and consumer discretionary take leadership, at least this month when we're talking about different sectors. Going forward, especially after yesterday's very strong GDP report, do you see that broadening continue, or do you see investors piling into mega cap tech after NVIDIA? NVIDIA didn't benefit, but it seems like other AI names traded higher yesterday after that report.
Yeah, this is a rising tide that will lift all boats, Frank. This is a really big green light. You mentioned acquiescence, which is my word of the day. We see a Fed that's about to acquiesce to the administration's demands. Maybe that's not September, by the way. I'd probably bet against that. But again, that doesn't matter whether it's September or in forthcoming months. But we also will see a market that will acquiesce to what the Fed is doing. And so you know that we've long held the mantra that you don't fight the Fed, and it's for those two reasons which I've articulated, which is money supply is going to increase and earnings growth will accelerate.
All right, so we got to get to your pick, but just speaking of acquiescence, I was talking to Joe Mazzola, head of trading at Schwab. He's looking at financials, 80% of those stocks above their 50-day, consumer discretionary 75%. So we got to get your pick. Do you want to go in one of those sectors that seem to be rising, or stick with tech?
So, as you know, I like to, whether bearish or bullish, I like to park in sectors that have superior earnings growth. And tech over the last few years, and probably going forward, many of the AI data center names, et cetera, will put up 30% plus growth. But one of the other sectors, you know, I've spoken about is the GLP-1 sector, Frank. And right now it's had a pullback because we haven't seen the inflection point. But what is widely predicted is that this is going to be a $150, $200 billion peak year market. Metsera's at the head of the evolution of that market.